Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today we're going to start our many technical indicator series. But today I'm going to discuss my personal favorite technical indicator. But before we start, you know the drill. Make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, so my favorite technical indicator is Fibonacci retracements. And just as a background to Fibonacci retracements, Fibonacci was a famous Italian mathematician that came across a certain sequence when it comes to numbers. Now, not only does this sequence operate in numbers, but it also operates in nature as well, almost across the board, whether it's bees pollinating flowers or whether it's a weather pattern. It all follows to this Fibonacci sequence. Now, Fibonacci, technically speaking, when you set it up on a chart, you could do it by time frames, and you could also do it by levels. And we're going to focus mostly on the one that is focused on levels, because that is, honestly speaking, most practical when you're a technical trader and a technical analyst. Okay, so let's first delve into what the technical analysis is of Fibonacci sequence. Okay, so in front of us we have something that looks like this. Now, if you ever watched a hurricane, it looks like something on the screen where it starts out at a certain point in the middle of the storm, and then it works away as it continues to get bigger and bigger. So there's a certain point that it starts, and it starts expanding in a circular fashion. Now, not only do hurricanes act like this, but bees actually pollinate like this as well, which becomes very interesting. Now, what does this have to do with the sequence of numbers? Okay, so here it comes. Okay, this is the sequence of numbers, and it's really very simple. It's one number plus the previous number. So if we start with a sequence of 1, because that's our starting point, then the second one is really 2, because the previous number to 1 is 0. Now, when we get to 3, it's 1 plus 2 gives us 3. Happens to be the first 3 numbers are 1, 2, 3. However, once we get to the 4th number, it changes. Remember, we're always looking at the previous 2 numbers. So the next 2 numbers are the previous 2 numbers, which is 2 and 3, which gives us 5. Now, 5 and 3 gives us 8, and so on and so forth. And that's how you get this circular, okay, where we start out from a point, okay, and we continue getting bigger and bigger, etc. Okay, now when we're setting this up on the chart, it's very simple. There's generally a Fibonacci retracement icon at the top of the toolbar, and you straight go there, you press it, and then that allows you to start the beginning point of that Fibonacci retracement. Now you go to the most relevant high in the chart, and then you cross down to the most relevant low, okay? And that's how you draw your Fibonacci retracement. It's quite simple, okay? It's as simple as that. Now, why do we use it, and what's its practical application when it comes to trading? So, it's used for 2 reasons, namely, number 1, it's used for knowing your retracement levels. Now, when the markets are continuing to trade upwards, okay, it's really hard to gauge at what point they're going to correct themselves, and if they do correct themselves, at what point are they going to honor previous levels. And Fibonacci retracements really gives you that help. It gives you that assistance. So it really anticipates support and resistance levels, and then that's actionable places where you could place trades, right as support comes or right as resistance comes. And you can't imagine how many times I've used the Fibonacci retracements time and time again to really utilize this very simple tool. Now, like I said, you're not the only person who's trading the financial markets. The markets are traded by many, many people, and everybody's looking at the same chart. So at some point, Fibonacci retracements become almost repetitive and anticipated by the rest of the market. Now, another point where it comes to Fibonacci retracements is that the longer the time frame that you're setting up the Fibonacci retracement, the more relevant it is. Remember, technical trading is all about historical data vis-a-vis what we're doing right now. Now, when you're looking at it at a longer time frame, it becomes that more validated. Okay, yes, can you set up a Fibonacci retracement to a 5-minute chart? Yeah, but it's not as relevant. It's not as applicable and it doesn't have as much credence. So remember, those are the very simple tools of just using one of the simplest forms of technical indicators to anticipate support, resistance, and especially when we're in a expanding market where the market is going higher and higher, at some point it is going to correct itself. And as a technical trader, you want to anticipate where that point of correction will be. And that's where Fibonacci retracements are really useful. Thank you for joining us for Technical Tuesdays. We'll see you here next week.